Hello, it is the Wednesday before Thanksgiving, and you might wonder, what does my financial advisor do on a Wednesday before Thanksgiving? He sits at home and thinks about inflation, the Federal Reserve, and stock prices. And that's what I want to talk about this morning. So here we are near the end of 2022. This year, stocks have had to do quite a bit of heavy lifting. And there have been two primary themes of why that is so. The first one is inflation, and the second one is the Federal Reserve. And I want to talk about each of these individually. So let's start with inflation. Inflation is really just made up of two factors. We all learned this in Economics 101, supply and demand. So when we look at these two sides of inflation, let's take supply. Ever since the pandemic began, and we're still in this position, there's been supply chain disruptions. And when you have supply issues and there's not enough supply, which is what we've seen, that drives up prices. When we look at the demand side of the equation, as demand increases, so do prices. And at the beginning of the pandemic, all of the stimulus payments really were spent, and that drove up demand. Add to the fact that we are all at home and we weren't able to spend money. We weren't able to travel, go out to restaurants, do anything else. And all of that money drove up demand. And now that we're back out, a lot of the money has shifted from goods to services. So travel, entertainment, leisure, hospitality. And we're seeing inflation on that side as well. That brings us to the Federal Reserve. And the Federal Reserve right now is trying their best to fight inflation. And one of the tools that they have to do so, frankly, the only tool they have to do so, is interest rates. And as they raise interest rates, the objective there is to slow demand. And that's exactly what we're seeing right now. The Federal Reserve is aggressively raising interest rates to try to slow the economy. Their hope is to not send it into a recession, but bring down demand, which will help bring down prices. The challenge is the Federal Reserve, with their interest rate increases, is only able to affect the demand side of the inflation issue. They have no control over the supply side. So they're fighting inflation with one hand tied behind their back. So that's the dynamics of what the market's dealing with this year. And let's talk about specifically how that affects stock prices. At its most basic level, a company's stock is valued based on the earnings that they're expected to achieve over the coming years. And so we look at that and we do a quick calculation that says this stock price should be based on the net present value of what those future earnings are worth. So let's look at a simple example. Let's say we have a company that over the next 15 years is expected to earn $1 per year in earnings. And so now we just need to determine what is the net present value today of those earnings in the future. So the question that we need to ask ourselves is $1 in year 10 worth the same as $1 today? And the answer is obviously no. Why? Because prices increase. And so that dollar won't have as much purchasing power in year 10 that it does today. And now you start to see how inflation impacts the value of those earnings. The higher the rate of inflation, the less that future dollar is worth. So as we've seen inflation increasing, we've seen this calculation, the net present value of these earnings, reflect the impact of that inflation. So increasing inflation equals lower net present value of that earning stream, which equals lower stock prices. And the same is true, interestingly, with interest rates. Also has the same impact. So now you've got inflation on the one side creating this downward pressure on those future earning stream values, and then interest rates doing the same thing. And now you can see why stocks have been so volatile this year, adjusting to this new reality of what the Federal Reserve's doing, what inflation is doing. So the key questions as we sit here today is, how high will inflation get? It looks like it has already peaked. And then also, how long will it stay elevated? And those are the questions that the market is wrestling with as it's trying to reprice all these stocks, all the value of these companies' future earnings. And that's what's driving all of this volatility, because there are many opinions on where interest rates are headed, where inflation is headed. As we begin to see answers to these questions, I think we'll have a better understanding of the direction of stock prices, as well as the magnitude of the volatility we'll see in the future. Okay, so that's my quick take on what's driving a lot of the volatility we've seen recently. Hey, thanks for watching.